Everyone, I hope you are doing well. It's been more than a year I haven't uploaded anything on my channel, but from now onwards, hopefully I'll upload at least 2 videos per month or maybe more than that. So, anyways, this is new series Basic of Stock Market, and this series is going to be lengthy. This is just the first video of the series. In this series, I'm going to explain to you about basic of stock market, fundamental analysis, what you need to know exactly in the fundamental analysis, overview of the economic analysis, then technical analysis, and in that I'll explain to you candlestick chart, pattern, and some more detailed analysis how you should need to look at the different candlestick patterns and some charts. Apart from that, I'll try to deep down into the, I'll say specifically different instruments traded in the market like shares, commodities, or maybe ETF, or maybe currency. Depends on the way I'm going to present and the way the demand is going to be. And if you have any comments or if you have any points you believe I can make the video on, I'll try to make it on that part. Apart from that, from now onwards, I'm planning to split my channel into 3 different ways. First is going to be the educational part, where most likely I'll talk about the finance, trading, and treasury. But in the second part, it will be the technical stuff like Excel or maybe the some stuff which I use for my analysis or something like this. And the third one is going to be my personal experience at my master's university, then maybe in the UK or whatever I want to talk, because it's my experience, so that doesn't matter. Even I might talk about the different certificates which I have completed previously, and if you have any queries about that, we can discuss it later. So let's start. This is index, which you can see this is quite old school type of index. What is stock market is going to be our first point, and how it works. Then instruments traded in the stock market, trends in the market, types of the market, and participant of the market. You might wonder like who usually trades in the market and all those things. Hopefully we'll cover that part there. Then regulators in the stock market and their roles and the function, because the regulatory part is very important in general in the market. Major exchange, their difference and the rules. Here I might use just one country specific because I want to focus on one side, and then you just need to correlate with your country or where you are based in. Let's say if you are from US, India, UK, or wherever you are, so you just need to consider that factor. Then brokers, their difference and the rules. Understanding clearing and settlement process, difference between demat and a trading account. So let's go further. So the first thing is, what is stock market? You might have heard about the stock market word many times from different people or something like this, but just to let you know that stock market means share market, and all the equity market and all those things you might have heard, it's the same. The officially or maybe the common definition is, the stock market is a place where the shares, commodities, bonds, or securities of companies that are publicly owned can be bought or sold either. Apart from that, there are multiple things do happens in the market, like stock market specifically, but eventually we'll look at this area slowly. How market works. The stock market is where you can buy, sell, and trade stock any business day, means most likely Monday to Friday, but some exchanges, they are open in some other time frame. So I think we are gonna go further into that area. It's also called a stock exchange and works like auction where investors buy and or sell their securities. It's a method in which investors or a trader earn through price appreciation or stock. Even, let me tell you, even you can earn the price depreciation here as well, because let's say if you buy stock at 100 and sell at 150, that's called as appreciation. but you can sell a stock at 100 and you can buy the stock at 80 if it falls down, and then either way you're gonna earn the profit. But it needs to be a proper analysis, and you need to be quite expert in this area. Sometimes the luck may work, but not always. So that is the thing. So let's go for the next slide. Instruments traded in the stock market. Many people, they have the curiosity that today I'm gonna eat soya. Do soya traded on the exchange? Obviously yes. That is our second point, that is called as commodities. The first is shares, then commodities, derivatives and future, then currencies, ETF means exchange traded fund, and the bonds. I'm planning to make separate videos on the exchange traded in the stock market and what are the basically difference between the different instruments and how they work out. But let me tell you in the small way. The shares, usually in some countries you can buy the partial or fraction of the share. Let's say if the share value is 100, you can just buy the 0.10, but in some countries it's not allowed to buy in the fraction, then you need to buy whole one share. But the market capitalization may vary, and the share price and the number of shares available in the market, that decides how much percentage you own of the company. Then the commodities. In the commodities there are different things, like let's say I'll say oil, metal, and maybe the normal commodities like soya or maybe chickpeas or some things. We also do trading of this. And the future, like obviously the currency and all the commodities, they do open in the derivatives or the future. You might have heard about FNO, future and option market. That is the same thing. Then the currencies, mostly currencies you can't trade in one side, just like you can't trade just a pound with a pound. So you need a pair of currency, means pound with Indian rupees, pound with US dollars, or maybe US dollars with the euro, or euro with INR, Indian rupees, something like this. Then exchange traded funds, this is very simple, plain, that there is nothing major. And then the bonds is kind of, we give a loan to the company based on some, I'll say, paper or something like this, and for that the company is gonna pay us some specific return, whatever they are gonna mention in that particular bond. Then the next one, it's trends in the market. Commonly you might have heard about the bull market and the bear market. Let me explain you in this short form or shorter way. So let's say when the COVID started, that time the market collapsed, or you might have heard about the many stock like almost all over the world the stock market was fallen down. So that is called as a bear market. Same happened in the 2007-8 when the housing crisis happened in the US, and that affected overall worldwide. But eventually it ended up in the bull market, means all the stock went up and they gone off like anything crazy. Just in the COVID, the market fall down around 50%, or some countries the market fall down around 60-70%. But now if you see, that is just a sharp fall, and now it's recovered with the bull market. There's one more thing which is not mentioned here in the slide, that is called as the sideways. Means sometimes market may not end up bull or bear, that will just go in the sideways. It's just like plus minus 5-10%, and that will be continue for maybe year or maybe 3 year or so, depends. So that's totally depends on the conditions. Or sometimes overall market may end up in the bull or bear, but specific sector may not. Let's say pharmaceutical or maybe the manufacturing, that sector might go into the opposite direction. So we need to study deeper down into that. Then the next point is types of the market. Obviously there are two types of the market. One is called as a primary market and second is called as secondary. Okay, so I'll explain to you in the small maybe with example later on. Let me tell you about the primary market. In the primary market, securities are created for the first time for the investor to purchase. New securities are issued in this market through stock exchange, enabling the government as well as the companies to raise the capital. It can be done through IPO. It needs to be most likely done through the IPO. It's called as initial public offering, and then the market, like company, go into the secondary market. A secondary market is a platform where in the shares or companies are traded amongst the investors. It means that investors can freely buy and sell shares without intervention of issuing company. In these transactions among the investors, the issuing company does not participate in income generation, and the share valuation is rather based on the performance in the market. Income in this market is thus generated via sale of the shares from one investor to another. So let this is very like basic or maybe just official words, but let me explain the smaller and easy option. Let's say if you want to open any specific company, let's say if you want to open the computer shop. Now you want to open the computer shop in your region or area where you are from, but for that you need a capital. You're gonna raise the capital, like let's say whatever money you need from your parents, or maybe you might have some saving or something. So this is in generally uh, nothing to do with the market, but based on that you might share some responsibilities of the house or something. But in the future, when you need to go further and want to expand your company in your region or maybe the more than region, that time you need more money within year or 2 year. If you need money, so if you don't have the enough, then you're gonna sell some stake of your company, maybe 5%, 10%, and you're gonna raise that fund. But eventually, let's say after 3 years, 5 years, if you have the enough, let's say, what do you call it, enough computers, enough staff and everything, and if you believe you can run your all like your shop or all the state or maybe the country, then you need good enough big money. That time you're gonna go to the private equity or the private like VC, venture capital companies, to get more funding. But obviously that comes with different rules, regulations, and the different covenant you might have to do with them. But obviously if you want to grow, you have to sacrifice few things, and you might have to sell your few percentage of your company. But if you have more dream, let's say if you want to start your own R&D, if you want to increase the size of your shop and all those things, and you need more money after that, then still now you are in the primary market. I just forgot to tell you, okay. Sorry. But let's say after that you're gonna go to the SEBI, or maybe if you are in the UK you're gonna go to FCA, or if you are in the US you're gonna go to SEC. These are the regulatory bodies. I'm gonna explain you in the, I think, next or next to next slide. Then they will give you permission as per your valuation and all those things to go for the public offering, means initial public offering, IPO, which you have seen here. And then in the IPO, the general public is gonna buy your shares, or maybe in the lot, or maybe whatever they want, and you're gonna get money, whatever the number of shares you are gonna able to sell the stock. Hopefully if you end up in oversubscribing situation, means let's say if you have 1,000 shares to sell, and if 5,000 people are interested to buy the shares, obviously you can make more money with it because your share is got oversubscribed. And let's say if you want to sell 1,000 shares but only 500 people are interested and everyone just want to buy one share, in that condition it's going to be undersubscribed. So that's not the good scenario for our company. Let's go for the next slide. Hopefully you might have understood this concept. Participant of the market. So let's say the first, how it starts is with the investors. Who is investor? Investor or the trader? It can be me, you, or anyone either. But I just have used here an example as a Warren Buffett. And what he's gonna do, he's gonna buy or sell the shares or whatever the securities he want to trade or instruments he want to trade in. Then the broker. The broker can be maybe Samco, Angel Booking, Zerodha, or maybe if you're in the UK, it can be Trading 212 or something like this. Then stock exchanges like National Stock Exchange, Bombay Stock Exchange, and MCX, Multi Commodity Stock Exchange, or something like this. Then, in apart from this, in the worldwide, there are few more or big exchanges like London Stock Exchange, New York Stock Exchange, Shanghai Stock Exchange, and so on. Let's say the next participant is the SEBI, Security and Exchange Board of India. So this is kind of police, I'll say, for the companies, for the everyone, and I'll explain to you what is their roles and regulation, how they regulate the things. So this is exactly in the next slide, that is regulators in the stock market. SEBI, which is Securities and Exchange Board of India, is an apex body which maintains and regulates our capital market. It was established in the year 1988 by the Indian government. Later in year 1992, it received the statutory power and the status of fully autonomous body. SEBI's responsibility is to ensure that the securities market in India functions in orderly manner. It is made to protect the interest of investors and traders in the Indian stock market by providing a healthy environment in the securities and to promote the development of the regulate. SEBI acts as a watchdog, just like I mentioned, like maybe police or something like this for all the capital market participant, and its main purpose is to provide such an environment for the financial market enthusiasts that facilitate efficient and smooth working for the securities market. So basically, SEBI is kind of body, it's independent body, and which operates for specifically for the market. That makes us in the healthy environment, and that allows more people to function. So let's say, what does exactly SEBI does? So the SEBI do in the primary functions, SEBI do protective functions, then regulatory functions and development function. And the role of the SEBI is issuer of securities if new company or new things come up in the market, then financial intermediaries, and the next is investor problem handling. It's quite complex and it's way vague in terms of this, but if you have any queries, you can just visit SEBI website and you might get the more information about it. So next is the major exchange. As I mentioned earlier, these are not the only major exchange, but this is just as per the Indian market. If you are in the UK, the London Stock Exchange. If you are in the US, obviously there are multiple stock exchange, but New York one is my famous one, favorite one. So let's say National Stock Exchange, its short form is NSE, is India's largest financial market, incorporated in the 1992. The NSE has developed into the sophisticated electronic market, which ranked fourth in the world by equity trading volume. This is as per the old data. I think now it has, I think it's a second or third, depends. Sometimes for a specific week or a day, it might ended up as world rank 1. So just ignore this point, okay? High liquidity and the quality stock companies are listed. This thing is like same, I'll explain to you in the small way. So let's say around 6,000 companies are listed on the Bombay Stock Exchange and 2,000 companies are listed on the National Stock Exchange. So many companies like those who are listed on the National Stock Exchange, you are gonna find almost 99% or 95% on the Bombay Stock Exchange. But the thing is, what we need is a liquidity. What is liquidity? Let's say if you go to sell the stock, we need a many buyer. So that's the reason we need a liquid. Like, what is the liquidity? Like the buying and selling number of volume needs to be high. But in the Bombay Stock Exchange, overall, let's say there are companies around 4,000 extra, which might not. If you want to buy them, you can't buy at NSE. You need to go on the BSC. So you can't just jump in or decide which one is good or which one is bad. If the stock is available on both, I'll suggest you to buy from the NSE, but if the stock is only available on the BSC, then you don't have choice. But obviously, BSC is one of the oldest stock exchange in the world. I think top 10 old stock exchange or something like this. There was some comments about it. Then role of the exchange. The core functions of the exchange is to ensure fair and orderly trading and the efficient dissemination of price information for any securities trading on that exchange. Exchange gives companies, governments, and the other groups a platform from which to sell securities to the investing public, to provide services for investing, trading, and risk management to financial institutions and the retailers. On the enforcement side, the stock exchange have shared their regulatory functions with the capital markets supervisory agencies. This is the role of the exchange, any exchange, maybe NSE, BSE, or MCX, or anything else. The next slide is about role of stockbroker. The images which I have shared here is just the employee who have done it for me, but it's nothing to do with this only two brokers. You can use the broker you want. Let's say I don't use none of I use the third one like Samco, which is not listed here. So it's up to you that which broker you want to choose. But what is the role of the broker? The broker acts as an intermediary for their clients to transact on the stock exchange. He buys and sells stocks for individuals who have signed up with him as a clients. With the onset of online trading facilities, investors could directly execute trades on the trading platform offered by the brokerage house. Broker also help in managing risk of their clients. So personally, in general, let's say it's kind of, it's a broker which is gonna help you to straight away buy and sell the stocks, and he's gonna develop a platform. So it's going to be the more easy platform to use, the more number of clients the broker might have. The next one, the understanding trading process. Now it comes to the, I think, the reality part. So here, let's say here we want to place an order of, I'll say, 100 shares of TCS. Okay, price can be anything. Let's say the price is 3,500. Okay, 3,500 is price of the share. We want to buy 3,100 shares of TCS. What will happen is, like, we'll just go on the broker app, we'll log in with our account, and we'll send that 100 share of TCS at 3,500. The broker send it to the exchange, the National Stock Exchange or the Bombay Stock Exchange. Then exchange finds the counterparty. Counterparty means there will be someone from our broker or from anyone who might want to sell the stock, but his price may vary. If you want to sell at 3,500 and if the price matches, then exchange confirms to the broker, and broker debit or credit your account. Let's say if we are gonna buy it, then it's gonna happen debit, and if we are gonna sell it, then it's gonna happen credit. So this is how it works. Let's say here you might see the clear picture of it, the understanding of clearing and settlement process. Sometimes you might have heard about the process about India went to T+1. India is one of the, I think only two countries till now have went trading +1. So it's very important to understand clearing and settlement process. So let's say here we are as an investor or trader. We have bought the 100 shares we have placed the order to the broker, then broker went to the exchange and we got shares, obviously. But then it go to this clearinghouse. The clearinghouse is gonna clear the shares from that account, like the opposition or the counterparty, and then it's gonna place to our account. And then depository means CDSL or something like this, it's gonna interfere here, and our all shares are going to be assigned in our CDSL or demat account location. And it's here we are. It takes trading +1 days nowadays. You can see on the next slide. Yes, this is trading +1 here. So the difference between demat and trading account is demat is an account that allows the account holder, that is investor, to store shares and securities in the electronic form. The account is used for holding securities and not for the transaction purpose. Buying and selling of the stock process after receiving order from trading account after trading plus 1 days. Then second one is the trading account. The trading account is an account through which the account holder place an order from trading securities. The account mainly used for the purposes of transaction of the securities buying and selling stock process at the exact moment. So let me explain to you in the basic way. If you have the account in generally for the trading or the demat with the same broker, you are not gonna feel any major difference, because you are, unless and until, let's say I use the Samco trading account. So once you open the account, you're not gonna feel anything majorly, or even there will be no difference for you, because in generally everything that does happen is happen through the broker, and he knows what to do, and the brokers already have made some process properly, so you don't have to worry about it. It should be fine for you. So the last part now you might interested in, this is thank you. So the next video will be about the benefits of the stock market and the trading and the investments. Then the further one will be about the fundamental analysis, or understanding the fundamental analysis and the economic analysis, how you can do it and how you can master at the fundamental analysis. And in the specifically, what are the things you need to know about the specific quantitative analysis side as well. Then I'll go further with the technical analysis. Then what is the use of the technical analysis and the candlestick part, chart pattern. Then market trend analysis will be the further one. This is going to be the slight different part, but I hope I'll try to explain it very nicely. If I have done any mistake, please forgive me, because I'm not a YouTuber or not a video maker. I'm just trying to explain to you whatever I know, or whatever you need to know. Whatever I have learned till now, I'm trying to share here, so in the future it might be helpful for you. If not you, maybe someone else or something like this. If you have any points or questions or anything, please do comment under this video, or even you can reach out to me. And thank you so much for watching this video. Have a lovely day.